risk reward ratios. So this is a really important part in trading, and many people forget it. However, it can make you, can turn you into a losing trader into a profitable trader, literally. So basically, risk to reward ratio is how much you risk for how much you will win in the trade. Okay. So in the last video, we've seen everything about position sizing, and we've seen that every time we've got a stop loss, that distance between the entry and the stop loss will be equal to a certain amount of money. Okay. So for example, we've seen that, let's say we are buying this. Okay. That we've seen that this distance here is equal to 100 euros in the case of the last video. Okay. So if our target is at this level, okay, this resistance, well, we're basically risking, okay, we are risking here 448 pips. As I said, pips totally depends on the currency, and this is gold, so that would be 44.8 pips, okay. So 44.8 pips, we're risking that to make 550 pips approximately, okay. So our risk to reward ratio is 1.16. Okay, if you take the larger number, so so we've got 50 pips here. You do 50 divided by so that was 44. Yeah, 44. So 50 divided by 44, and you've got your risk to reward ratio. Okay, so you're risking 1 in order to make 1.16. Now, the beauty of risk to reward ratio is this. Okay. So here we've got the risk, how much we're risking, and the reward, right? So basically, if you're risking 2 in order to make 1, so this scenario would be we are risking this, and our target is around here, all right? So we're risking all that just to make this. So there, 0.5. This means we're risking 1 in order to make 0.5. So our risk to reward is 2 for 1, all right? And in that case, we need to win 67% of our trades just to be break even, so to have €0 in the bank. We need to be right 67% of the time. And the higher your risk to reward, so let's say 1 to 1, so you risk 1 in order to make 1, you need 50% hit rate in order to be break even. And then if every time you lose 1, and when you win 2, you only need to be right 33% of the time, okay? That's the whole beauty of it. So what I'm going to teach you, and it's how I trade, and I only open positions, if you can remember with my confluences video, one of my confluence that I look for and is a requirement in order to enter a trade is the trade needs to have a risk to reward of 1 to 3, okay? So in that case, if my hit rate is even 30%, okay, so I open 10 trades and 7 of them are losing trades, I only win 3, well, guess what? I'm still profitable, all right? So in that case, you'd think it's quite difficult to lose money because I need to have less than 25% hit rate in order to lose money. So a risk to reward of 3 would be this, okay? So 3. But obviously, we're not going to put our target up there just to meet the requirement of 3 to 1. We need to find a trade where we've got our stop loss placed, target placed. We say, okay, that's where I think it's going to go. The stop loss is at the right level, and then you look at your risk to reward. If your risk to reward is at 1 for 2, well, you don't open it. It's not worth it to risk 100 euros in order just to win 200. All right. It's not worth the risk, so don't do it, okay? Even if the setup looks really good, it's not, you shouldn't trade it, okay? We need a minimum of 1 for 3. So in that case, let's say we say, okay, so I'm thinking of buying this. I'm going to put my stop loss just below these lows, even though that takes the wick, okay? So I'm going to put my stop loss here. All right. Now my target would be, I think that's a double bottom or something. So I would say this, take it from here. There we've got some levels, and that's we've got resistance here as well. Okay, so that might be our level. All right, you can see the resistance here, and let's make it not too far to make it reachable. So we're going to put our reward here. So that's my plan. Okay. Now I'm going to check if my risk to reward is good. So I could see basically here, how much am I risking? I'm risking 34 pips. Okay, remember that's gold, so it's a bit specific example, and so 340 pips in order to make 1,300. All right, so what's the risk to reward on that trade? Okay, well, my risk to reward is here to here. That's 3.6. That's part of my requirements. So yes, that's a good trade. If I've got all my confidences, I'll go on and trade it. All right. Now, if I didn't think like this and I thought, okay, I think the price will reach that resistance again before maybe going back down, so I'm going to target these levels, no problem. That's a good idea. However, your risk to reward is no longer good. Okay, it's at 1.8 or something. 1.6 risk to reward. So it's not right. Please, 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 please do not say, okay, so it's not right, but I really want to trade it, so I'll move my stop loss to here, be very aggressive to have a 1 to 3 risk to reward. Okay, move my stop loss up to there. Okay, no. You should put your stop loss first, target, and then see if it's the right risk to reward. All right. For example, let's look at this. So that was on US oil. So I've got several accounts, as you know, with different brokers in order to spread my risks. And so I had this trade on US oil. Okay, so we had strong bearish move with a correction, ABC. Okay, corrective wave, because corrections often occur in 3. All right, 1, 2, 3, and then another wave down. So ABC went down, 1, 2, 3, went down again. Okay, so plus SMA here as a resistance, plus the fib. So we had many SMA 200 as well. We had many confluence, broke that little support retest. Okay, so with my other accounts, I managed to short it just like this, and the trade is going fantastically well. However, on my other accounts, I wanted to short it again as well, but I was too late. So what happened is that I arrived and the price was around here. Okay, so that would mean my entry is here, my stop loss would still be there, and my target will be approximately, it was around here. Okay, so that would give me a risk to reward of 1.79. Well, guess what? I did not open my trade because I don't have my risk to reward anymore. However, I did just a few 30 minutes before. Okay, and what I could have done is put my stop loss right here, all right, behind this swing, and say, yeah, okay, now I've got a sort of a proper risk to reward. No, I didn't do that. Okay, because that wouldn't leave me enough space for the trade. So that would mean I tweak my trade just for it to allow a 1 to 3 risk to reward ratio. So please never ever do that. Okay, that's all about the psychology as well of trading. So yeah, so that was my trade, and it was a good trade. I'm still in, and however, I couldn't re-enter with my other account. So yeah, so that's all about risk to reward, and so remember that. So a minimum for me is a 3 to 1. I would not trade if it's below, and of course if it's higher, well, great. But yeah, don't. That's what we're saying about placing stop losses. People place stop losses really, really tight just to get massive risk to reward ratio. Well, no, okay. You need to have a proper strategy and proper placements. And yeah, just remember all these numbers, okay? So you know your numbers and you know what's your win rate just in order to be profitable with your risk to reward ratio.